Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. This is the second video in a two-part video series going over the stochastic oscillator. I recommend you watch the first video before watching the second. In the first video, we give you all the history as well as the calculations and how to use the oscillator in an oscillator fashion, overbought and oversold, dependent on trend. If you're in an uptrend, how to use it. If you're in a downtrend, how to use it. And if you're just trading sideways or flat, how to use it. This video will go over the 4 different divergences that George Lane actually used this stochastic oscillator for and how he determined a buy and sell signal. Let's start with the bearish divergence. As we've already stated in the first video, the stochastic oscillator is actually measuring momentum, and then you compare that against price activity. And what he was looking for, which George Lane was looking for, was situations where they diverge, where price would do something different than momentum. And he would say that momentum would move before price, and therefore he would find opportunities to make money using that. Alright, first we're going to look at this high point right back here. Okay, you had to run up here in price and pull back down, and then run up here in price again, almost equal to the previous move, right? Back here we look at the slow Stoch, and we can see we pulled way up here, pulled back down, and then pulled up here. Not nearly the same degree of advance here compared to what we're seeing in price activity. Price activity is nearly flat right here. There's no trend whatsoever there, up or down. Yet we're seeing the high points here and here trending lower. That's a telltale sign, and it's also a bearish divergence telling you to look for the move to the downside. And that's exactly what happened thereafter. Big move to the downside. And clean that up a bit. To get confirmation of what you're seeing there, you'd want to wait for either a move back below the 80 line. This is the 80 line right here. All right. In this case, you had advanced above it, pulled back down, and then did not advance above it again. But if you had and still been lower than the previous, one of the confirmation signals would be breaking back down below that 80 line. In this case, you didn't do that. You ran up here and hit the 80 line and ricocheted off of it, finding resistance there. That's another telltale sign. But another way of doing it is to simply look for that crossover of the %K crossing the %D, or the signal line, where the black line crosses back across the red line. That's another confirmation. Or trading back below the 50 line. That would be yet another confirmation when it did all those things. Now let us look at a bullish divergence situation. Remember, typical situations will have a situation where the market was overbought for an extended period of time, and then you get the divergence set up. So keep that in mind. Also, if you're looking for a bullish divergence, you'd be oversold for an extended period of time, and then it would show up. So keep that in mind as well. And when you're pulled back down below the 20 line, people are going to start saying she's oversold. That may be the case, but we're looking for a divergence, and you're not always going to have one. So you got to wait for one to show up. Here you've got a situation where price activity advances up here, pulls back down, advances again, and pulls down again, even lower. You've got a series of lower highs, lower lows, right? Okay. Here you've got a situation where you're looking and you're comparing it against the slow Stoch, and you'll see an advance here, pull back down, and an advance here to make a lower high, just like you did up here. That's normal. And then pulls back down. However, it makes a higher low. It's completely different than what you're seeing right here. Let me clean this up so you can see it. Alright, you've got a low point here and a higher low here. That's actually, you could draw a trend line on that, so you get your trending up. Here, same corresponding time, you've got a low point here, lower low here, you're trending down. That is a bullish divergence calling for a move back to the upside, basically calling a bottom in this chart. And it was actually true. Again, you have 3 different ways to confirm it. Either a move back above the 20 line, which in this particular case, that entire signal came up. You weren't even below the 20 line, so that couldn't be one of your options here. The other option would be the %K, the black line right here, crossing back above the red line, the %D line. That's the %D line. moving back above that would be another confirming signal. And then finally, a move above the 50 line, that would be confirmation as well. It did all three of those things. Another type of divergence that Mr. Lane noticed and used would be the bull setup. This basically looks like this. You've got a high point here and a lower high here, right? Corresponding high points on your oscillator is here and here. They're trending up. Okay? This calls for the next pullback to be a bottom, a reversal situation, and buy opportunity. So the next time she pulls back down here to the 20 line, you've got your buying opportunity. Again, you want to look for the confirmation, but move back above the 20 line. Let me draw up the 20 line. 20 lines here. You want to see that move back above that 20 line is confirmation. Also, the %K crossing back above the %D, that would be fine as well. And then also, last but not least, a move back above the 50 line if you wanted to wait that long. It won't get you in at the very bottom, but it's another method of getting that much more confirmation. So if you don't like trading at this point, you can wait for a move back above that 50 line. Finally, we will look at Mr. Lane's bear setup. In this situation, you have a series of low points, all right, here and here, trending higher, while the corresponding low points on the stock itself are trending lower. Okay, this tells you that the next bounce to the upside will be a top or a short opportunity for you to use. Again, you can look for your confirmation breaking back below the 80 line. All right, so here you move above it, and that was a bounce you're looking to short, and you don't want to do it until you get confirmation. So you get the confirmation by the %K crossing back below the %D line, the black line crossing back below the red line. Also, a move back below the 80 line, that would be your best entry opportunity. That gets you in around this area. And then another way to wait for that much more confirmation would be to see it cross back below the 50 line, which is this line right here. Okay, those are the 4 different divergences that Mr. Lane would use to find his buy and sell opportunities. I highly recommend them. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.